resilient and equitable communities. My name is Lily Beidel-Horton. I'm one of the co-chairs of WIIN, and we are thrilled to have you all joining us today. And we're also delighted to see so many new faces in our Zoom crowd this afternoon, as well as many members who have been with WIIN since our inception 3 years ago. For those who have not attended a WIIN event in the past, welcome. We are a Washington, D.C. based organization led by volunteer board members. Our goal is to bring together women and men across the impact investing spectrum to foster a sense of community that promotes learning through events such as today's, as well as networking across the industry. Although we still cannot be together in person, it is in the spirit of networking that we encourage participants to send in via chat their name and job function or organization so we can all get a better idea of who's participating. With that in mind, we also encourage you to react in real time to the speakers by sharing your thoughts, questions, and personal experiences in the chat function. As we continue to foster networking in a digital setting, please feel free to share your contact details to be able to follow up with each other via email or LinkedIn. Without further delay, it is my pleasure to pass the microphone to Jessel Amin, who will now be your co-host for today's webinar.
Good afternoon, everyone, and good morning to those of you joining us from the West Coast. My name is Jessel Amin, and I am a board member of WIIN and also the co-host for today's event on building resilient and equitable communities. This topic is central to the work that I do at Capital Impact Partners, which is a national nonprofit community development financial institution, where we believe that every community should be built on a foundation of equity, inclusiveness, and cooperation. We work to build the power of divested communities through targeted flexible financing and through programmatic support. In the United States, communities of color are bearing the brunt of the pandemic's health and socioeconomic consequences. In Missouri, for example, 40% of those infected are Black or Latino, even though those groups make up just 16% of the state's population. Federal data shows that Black and Latino people have been disproportionately affected by the coronavirus in a widespread manner, and that's pervasive throughout the country when we look at both urban, rural, and suburban communities and across age groups. Beyond the racial disparities in who contracts the virus, the COVID-19 crisis has laid bare the disparities and vulnerabilities in our economic, health, housing, education, and social systems. The crisis is exposing and compounding deeply entrenched inequities in our society, inequities that are rooted in longstanding structural racism. This structural racism really reaches far beyond even just our criminal justice system. In this moment, when COVID-19 has stopped us in our tracks, we see it as a moment for level setting, an opportunity to state how we want to see our systems work for people, and to set into motion the policies, collective behaviors, and mutual care that will enable transformation. We can work towards lasting systems change that will uplift rather than hold down communities of color. As the impact investing community galvanizes into action, we must be thoughtful in our approach to avoid and reverse our own racial biases and the legacy of decades of racist banking and investment practices. It's time for a paradigm shift where we can push the boundaries of how we traditionally think about ownership, governance, and risk sharing. We need to ask ourselves tough questions and reflect deeply on our own misguided practices to build a more sustainable and inclusive economy for shared prosperity for all. This is the vision that inspired the event for today. Each of our panelists will be wearing two hats, one of an activist and one of an investor. Through each lens, they will deepen our understanding of the historical context of the systemic vulnerabilities we see today. They'll trace the rise of community development financial institutions through the civil rights movement and racist redline practices, and help us understand how the coronavirus pandemic has further amplified disparities we see today. Then we'll go on to explore the impact investing vehicles that prioritize racial equity and include sustainable and recovery. And finally, we'll make considerations about our call to action. So we don't want the conversation to end today. We hope that today's event will sort of inspire ongoing conversations at each of your organizations. And we'll be following up with some resources to sort of help you on this journey. And so I'm really excited to let you know that we did select the Bail Project as the recipient of proceeds of today's event. When last we checked, we raised just over around $1,700. And we wanted to extend sort of a really heartfelt thank you to all of you who were able to contribute to the cause. This is our first donation-based event, and you all really exceeded our expectations. So thank you for your participation. The Bail Project really serves to sort of promote our values as an organization, and is working through its revolving loan fund to promote racial, sort of reduce social and economic disparities within our criminal justice system. So we are really pleased with the turnout for today. So we do have a really incredible lineup of speakers we want to get to, but before we jump in, we'd like to begin with a few sort of a lightning round of poll questions. So in a moment, you'll see a poll pop up and you'll have about 15 seconds to respond. And then the results will pop up live on the screen. So yeah, and don't forget, once you hit your answer choice, you just have to hit submit to record the answer. So Laura, can we get that first poll question? Great. So the first one's really easy. We just want to get an idea of where folks are calling in from today. Great, so it looks as we expected, most of our participants are here on the East Coast. So welcome back to all of the DC WIIN members are here to join us. And welcome to all of you joining us. That's one of the nice benefits of holding this event virtually, is that we've had an opportunity to sort of expand our network. Great, so the next set of questions are really aimed at helping the speakers identify sort of the experience level of participants. So is for us to understand the sort of lens that you're bringing to the conversation. So please select which of the following best describes either your organization or your profession. I recognize that maybe a few apply, but try and select the one that's most relevant. Okay, we'll just give a couple more seconds. Great, so it looks like we have a lot of folks from the community investing and happy to see folks from the community organizing and activist perspective. I think these sort of very diverse array of perspectives will really help to enrich our conversation today. Great, so the next poll question is, it will help us sort of understand the experience level of who's in the audience. So if you could tell us, sort of quantify your years of experience within the impact investing space. Great, this is really exciting to see. It looks like we have a nice sort of composition of lots of different experience levels. So I think the panelists will take that into account as they're sort of framing the sort of investment piece of this conversation. And our final poll question, we want to hear a little bit about why you're here today. Great. So it looks like the most popular answer choice is identifying impact investing vehicles that promote racial justice. And this is going to be sort of a key piece of what we speak about today. So I'm glad to hear that. Okay, so finally, our final sort of exercise in the opening remarks is going to be around a word cloud exercise. So if you could either type or paste this link into your browser. And I think someone's going to post it in the chat too to make it a little bit easier for you to copy and paste. But I would love for you to take a moment to share either just one word or a very short phrase describing how the impact investing community is responding to the current crises. So as you think about this, think about, what's going well, what's not going well. Are we moving too quickly? Are we challenging the status quo? Are we being thoughtful? What sort of funds or coalitions are really gaining momentum now? And I will go ahead and share. Great, so I'm seeing some responses coming in. And we definitely encourage you to sort of throw in a couple of different words and just hit submit or enter after you've typed in your word. Great, so I see slow, uninformed, inspiring, opportunistic, limited, reactive, unclear, missing. Lots of great words we're using to describe this. So we'll be sure to definitely get a screen grab of this and share with you all afterwards as well. Yeah, let's give it just a couple more seconds for folks to get in their thoughts. Unapproachable, intentional, driven, still, urgency, defensive, uncollaborative, level, brave, sustained, uninformed, reactive, unclear. Great, well, thank you all for your contributions. This is really sort of a great sort of grounding exercise, and I think will help to sort of lay the context for our speakers, and they'll be able to sort of provide some reflections on what you've been thinking about today. So I will now turn it over to our co-host Bava to introduce speakers.
Hello, thanks very much, Jessel. Hello, everybody. My name is Baba, and this is my third year as a WIIN board member. I've been in the impact investing field for about 15 years, most recently through climate finance investments at the World Bank. We are so excited to be hosting this conversation, so we do hope to get right to it. I'd like to begin by introducing our moderator, Alexandra Laforge. Alexandra will then take over as host and pose a specific question to each of the panelists. That will be followed by another round of questions, which will be open to all of the panelists. We scheduled about 30 minutes for each of those rounds of questions. And throughout the discussion, as we've mentioned, we also welcome your feedback, your questions that we will take later. Keep them please coming through the chat function, as we will be collecting and then moderating those. So, and we'd ask that you please be as specific as possible. So if your question is intended for a specific individual, let us know. So Alexandra, we're so grateful that she's with us, is the Director for Impact Investing at Arabella Advisors. She is joining us from the West Coast, the Bay Area. Alexandra has had a long history with impact investing, not only in her current role at Arabella, but also having had leadership roles in the investor circle for over a decade, including interim executive director. So with that, I'd like to turn over the floor, or as it were, the camera, to Alexandra to please kick off our discussion.
Great. Thank you, Bava and Jessel and Lily and the WIIN team. Thank you for that warm introduction. I'm thrilled to be here today, and in particular to have a front row seat as we hear from our three panelists, Namaka Agbo, Lori Chapman, and Rachel Robichaudi, three women who I have followed to some degree and who really have a deep understanding of the climate in which we're all operating right now, and a lot of experience and their own visions for how we can use impact investing as a tool to really advance our own communities in a more equitable way. That's something that I'm constantly thinking about with Arabella clients. How do we help our investment portfolios respond to things like the coronavirus, but also work towards creating more inclusive, more equitable, more regenerative, more restorative economies and communities? So really looking forward to digging into these topics and to gathering some ideas, in particular around some investments and different vehicles that may be particularly compelling opportunities right now. I'll just underscore what Bava shared, which is that I will kick us off in this conversation and have some questions to pose to our panelists, but we really do want this to be interactive. So please do put your questions in the chat box. We'll be monitoring those, and as we open it up for Q&A, we'll be sure to lift those up to this group as well. Why don't we go ahead then and dive in? I'd like to start with each of you in turn and ask you to introduce yourselves and help us get grounded in some way. Namaka, if we could start with you, would love to learn a bit more about you. And in particular, can you help us, help provide some context to help give us a sense of how we got here, why we have these vulnerabilities in our economic and social and health systems, and how you think of restorative justice within that context?
Thank you so much, Alexandra, for having me, and thank you, Jessel, Bava, and everybody else for setting up this really exciting discussion today. Yes, my name is Amaka Agbo. I'm based out of Oakland, California, and for the past few years, I've been an independent consultant. But I come out of a long-term social racial justice organizing background, and I've really spent some time trying to understand what is the role of capital in supporting a lot of the racial and social justice work that many frontline community organizers and activists are a part of. And one of the things that has become really clear to me as I've kind of learned more about the impact investing field and has started to engage in my own integrated capital investment funds through the Restorative Economy Fund and other projects, is the fact that many people fail to understand that systemic racism is unfortunately woven into the very fabric of how we move money and capital and how we've designed our financial systems in the United States. And many people have kind of likened this social political moment that we're in right now or have characterized it as being apocalyptic. And the Greek meaning of the word apocalypse is actually to reveal or uncover. And so for some of us, this is new information where we're just starting to understand why Black communities are being disproportionately impacted by COVID-19. But for those communities, Black, Indigenous communities of color, Latino communities, given some of the statistics that Jessel had shared earlier, or sorry, that Lily had shared earlier, this isn't new information to us. And one of the reasons we see communities of color unfortunately dying at a higher rate from COVID-19 is because our public health crisis is interwoven with so many other systemic crises, right? So when we come to understand that Black communities are disproportionately impacted by pollutants because they live in places like the Toxic Triangle here in the Bay Area or Cancer Alley in New Orleans, these are the reasons these communities have higher rates of asthma, have higher rates of cancer, and aren't able to actually get access to the affordable health care that they need to be able to help them recover from the crisis. We also see that these are the same communities that are being disproportionately policed for either wearing a mask because people see them as scary, or for not wearing a mask, given how some of our states have decided to enact shelter-in-place laws. And so all of this really brings to light the ways that communities of color have been disproportionately harmed, and what has then created kind of this racial wealth gap. And oftentimes we talk about the racial wealth gap as if it's an unknown abyss. But the truth is that that gap is made up of very specific policies and initiatives. We can look at the history of redlining. We can look at the 13th Amendment. We can look at the ways our financial systems were designed. And I think Nicole Hannah has done a great job on the 1619 Project and really uncovering the ways that the enslavement of African descendants in this country were actually the mechanism, the vehicle, the impetus for creating our modern day financial systems and mechanisms. And so our ability to really sit with understanding the history of how we got here, how interwoven it is to our systems, our institutions, and even the ways that it shows up in our own individual implicit bias and prejudice are kind of essential for us to start to enact policies, initiatives, and new financial mechanisms to move us forward and out of it. Alexandra, you'd asked a question about, why restorative justice? Why is that kind of part of a tenet of my work on restorative economics? And I designed restorative economics to really force us to sit with this history, the legacy, and context. Restorative justice is a process that many community organizations have lifted up as an alternative to punitive policing and criminal justice system. It requires us to bring together all of those people that are directly impacted by an issue to really sit with the hurt and harms that have been created, and then collectively come together through a process of repair and reconciliation to figure out how we move forward. And so the same is for me with my work with restorative economics, really being intentional about looking at reinvesting resources back into Black, Indigenous, and communities of color that have been historically disinvested from and excluded from the benefits of our economy, and reinvesting in them in a way in which we're ensuring that they have the direct ownership, control over the assets, the means of production, and the community wealth building strategies that provide them the economic stability and platform to be able to move forward. When we fail to actually sit with the history of how we got here, unfortunately, we end up replicating a lot of the same ills and harms that created the problem. And so all this to say that given the moment that we're in, given the way that we've seen frontline activists actually pushing for a shift, not only in defunding the police, but also calling us to make strategic investments into those same services and mechanisms that we know are proven to support communities of color is what we're calling for. And so being able to look beyond a deferment of loans and interest rates is kind of like putting numbing cream on a toothache. And we actually need to sit with extracting the root causes of how we got here and look at how do we support communities and being able to kind of weather this economic depression and be able to kind of come out on the other side in a stronger position. So thank you.
Great, thank you. Thrilled to have you here, and thanks for sharing that. Two words I heard you say that really resonate with me: that sit with and intent. And I think we've got a great opportunity to do that today, to really sit with these topics in our history and hone our intent. So looking forward to diving in more. And I'd like to turn next to you, Lori. Help us kind of zoom in on communities. We think about CDFIs, the community development finance and industries really rooted in the civil rights movement in a lot of ways. So can you help us understand that a bit more? And as we think about present day, how are you seeing our current racial justice movement have an impact on community finance?
Sure, thank you. So just a little bit about me, and I presume that they'll put up my bio on the background, but I've been with an organization, Enterprise Community Partners, for nearly 16 years, and we've invested roughly $53 billion, primarily focused on the creation and preservation of affordable housing. And housing we see, I don't know how many of you may have had the opportunity to sit in yesterday. There was a live cast with Nicole Hannah-Jones actually speaking on the issue of housing and the impact that of our housing policies have had on Black and Brown communities over time, and to this issue about wealth creation. And quite honestly, when you think about housing, it's always location, location, location. And Micah just spoke to location and where people live and the impact of that location on not just their health outcomes, but their educational opportunities, and quite frankly, their ability to get to and from work and work that is meaningful and so forth. So our work as a houser is one where we're truly focused on housing really being that platform for individuals to find themselves in a place where they really are able to take on a variety of opportunities. So as an organization, we are an end-to-end platform for housing where we can take on all types of investments really to go back and invest in communities in a way that is the way that I like to think about it, and you'll hear me say often, that we have to be thoughtful and that it needs to be profitable, right? Because as an organization, we need to be able to continue on with our mission. But the big challenge is that when we're investing in these communities, we're often profit maximizing, which necessarily means it's always extractive. And in that regard, it's very difficult to really be thoughtful about building wealth. So to the question specifically, you know, the rise of the CDFI industry, it really dates back to after kind of the riots in 1968 and kind of the first unofficial, if you will, community development financial institution was a group in Chicago called South Shore Bank. I don't know how many of you are familiar with South Shore Bank. It's no longer in business, but it was in Chicago. The Clintons got to know that bank and the folks who started it very well and appreciated the model and the mission of that organization, and then went through, as he assumed leadership in the White House, to create the CDFI fund. In addition to that, or in between that, in terms of what propelled the growth of these organizations, was really the Community Reinvestment Act, right? Which, you know, as we think about it now, we in the field talk about the fact that it's really kind of lost its teeth in the focus on its really addressing the issues of redlining. That was how it really came about, right? And the fact that communities of color, and we should all remember that redlining was not a creation of financial institutions, it was a creation of government, right? So it again goes back to this question of how do we find ourselves here today? It is truly structural, it was all intentional, and it is self-reinforcing. When you think about all of the pieces that come together to continue to have Black communities suffer as they are today whenever there's a major crisis, quite frankly. And so with the Community Reinvestment Act, a lot of the capital that CDFIs have today comes from those banking institutions as a result of CRA, the acronym associated with Community Reinvestment Act. And so we, as an organization, have certainly benefited from that, but that benefit has quite frankly been unequal. And when I say that, I also am a member of a group called the African American Alliance of CDFI CEOs. And much like capital does not flow to Black and brown people, those organizations led by Black and brown people also are capital starved. And the impact of that, quite frankly, continues to be an ongoing difficulty for businesses in these communities to have the capital needed, not to just necessarily start, but to survive when they do face a hiccup. And as those organizations are capital starved, it's going to necessarily mean that the capital getting to the types of organizations that are in these, or organizations or companies, if you will, or businesses, does not necessarily flow either. And then again, we see a disproportionate impact, not only on the community, but also on those individuals, because it was their livelihood, right? It provided services in those communities that not only are lost, but take a substantially longer period of time to return with respect to that. So in terms of kind of the thoughts on current racial justice movement and its impact on community investing, you know, it really comes down to how are we going to take this moment in time to be thoughtful about not only how capital flows, right, and who it flows to, because I do think that there is an importance to be thoughtful about what I call culturally competent capital, right, that really does begin to be thoughtful about not trying to make every decision about how that capital needs to be managed, but in fact is given in a way where people who need it have the authority and the agency to make the decision on how best to use it for them, their family, and their communities. And right now we don't do that. We're very prescriptive. both for philanthropically when the capital comes in, as investors when the capital moves in, and oftentimes that prescriptive nature of it has in no way involved the community and quite frankly, having say in its use, and therefore we find ourselves keep going back to, well, why didn't it have the impact that we wanted it to have, right? And it was because it came from authorities that aren't necessarily in touch with the real needs of that community and what will help it transition. So fundamentally, we have to think about how capital flows in, who's involved in the decision-making about what that capital looks like, what it gets to do, and quite frankly, who it touches. I remain fascinated, quite frankly, and I don't do enough going and checking in on the experiment in Stockton, right? Where there have been investments in people, right? Not in things, and the people get, I believe it's $500 a month, and they make the decision on what they do and how they use that money. And then that becomes, again, a place for them to really say, here's how I need to invest in my family in order to address whatever it is. They can address in education. They can address it in starting a small business or a micro business. It's their choice, and choice matters in terms of how it goes forth. And I won't forget, you know, in Nicole Hannah-Jones's live cast yesterday, she said something that it took me a few minutes to catch, which was funny and it was tongue in cheek. And she said, if they choose to invest in Gucci, that's their decision, right? But in large part, nobody is making that decision. They're investing in their families. They're investing in the future of their family. Community development financing has to be equally thoughtful about how we take capital to communities and make sure those communities, and when I say that, I don't mean local government, I mean the actual community, those stakeholders who live there day and day are involved in that decision making. Mm-hmm. So I'll stop with that.
Well, that is a great start. Lots to chew on there. I might just kind of quickly point, you mentioned CRA, and that's such a great point that government and policy is really critical here. And you all may have seen this morning, the Tipping Point Fund, which is a donor collaborative of some of the largest foundations working on impact investing, field building, announced their first round of grants, all focused on public policy efforts for catalyzing private capital, for public good, building on things like CRA, but in a more equitable way. So happy to see a lot more work, that type of work, getting attention. All right, well, let's turn to Rachel. If you can help us zoom out a bit. I know last week you were profiled in the New York Times alongside a series of other racial justice approaches. So as we think more broadly, how are you seeing some of these systemic injustices really being laid bare? And in particular, if we look at our public markets, how are investors and impact investors who are using public portfolios either contributing to those injustices or better yet, hopefully responding to them? And Rachel, I think.
Yes, I am unmuted. I know we practiced it, but yeah, that unmute button, always an issue now.
Welcome.
Yeah, hi everyone. I'm Rachel Robichaux. I'm the founder and CEO of Robichaux and Phillipson, and also the co-founder of RISE, Return on Investment and Social Equity. Soon you'll hear our name change to, the strategy name change to Adesina, and the company name Adesina Social Capital. So stay tuned for that. And just to give you a little bit of background about me, I grew up in a segregated rural community on the Black side of town in Oroville, California. It's about 70 miles north of Sacramento. And growing up in an all Black family with most of the men in the family either murdered, sometimes by police, incarcerated, or otherwise driven out of the family. I grew up decidedly in a female context in the Black community and in poverty. And those are all things that I never forgot as I made my transition into the world of finance. And what we do for work, or what I do for work and what our firm does, is we're really an investment-driven approach for driving long-term, large-scale systemic change for the good of people and the planet. And what that means more specifically is that we hold a basket of public equity, so like stocks, for example, and we also have a fixed income portfolio that we're coming out with shortly, which is the bond side of things. And what we do with that is, rather than just keeping the information to ourselves about how we're screening these companies, we actually share that information with other investors and organize them to also use a similar set of standards that we're using in order to evaluate companies. The reason why that's so important and transformational is not because we somehow just happen to have a better idea about how to evaluate companies, but really because we do something that has not previously been done inside of the financial markets, which is that we intentionally create relationships and links to social justice movements that are by and for the communities that are most impacted by the harms of capitalism. And we specifically focus on communities that are doing work around racial, gender, economic, and climate justice, which are not a random set of 4 things that we're working on. As many of you are already aware, they're very interrelated. They are the most vulnerable aspects of our society. And just to kind of give you a sense of some of the work that we do, and to make sure I'm staying on track and answering your question, Alexandra. What we did recently that was covered in the New York Times is we published a racial justice exclusion list, and investment managers tend to hold this intellectual property about the information they have about publicly traded companies to themselves, or they purchase it at high cost from others. What we decided as a firm is that the financial system, which is rooted in the extraction of labor, life, and land from Black and brown bodies, and specifically from the Black community in the wake of the COVID crisis, and in the resurgence of the uprising that is the Black Lives Matter movement, we made a specific choice to publish all of that data because, in a sense, when you're holding on to that data, what you're really doing is you're holding on to the ability to turn a profit for that. And it's our deep belief that our industry has turned enough profit, and that the financial system has a special responsibility to make reparations. Specifically, most people don't know this, but Wall Street itself was built by slaves, and it became the official slave market in New York. And another thing that people don't know is that the very first bond market was built on the lives of enslaved people. And the very idea that we have of mortgages originally started with enslaving people and taking out loans against them as collateral. These things have not been disrupted by the end of slavery. It's really just transformed into various different systems, primarily what we see in the United States in our criminal injustice system. And so it feels very important to us as a financial firm, understanding that our roots are very deeply in this exploitation, to make reparations in the form of sharing that data and organizing other investors to use that data specifically to let these impacted communities set the standards for how these large companies that became so large because they were able to pull capital from the public, how these large publicly traded companies are standing on issues of racial, gender, economic, and climate justice. So we really let them draw the line, create our portfolios in that way, and on particular issues, like, for example, particularly racial justice, organizing other investors to make those similar choices. And in our campaigns, our investor campaigns around this work, we've had tremendous success. One of the questions I want to make sure that I'm answering is how the coronavirus pandemic has exposed the vulnerabilities of our economic, health, and social systems. And I want to really weave that into what I saw come up in the word cloud, which was a lot of reference to slow and uncoordinated. And many folks asked us, you know, how did you put together a racial justice exclusion list so quickly when so many people are coming forward and saying, what do we do, particularly in finance, because they're unaware of these deep linkages they were saying like, how could you come forward so quickly? And one of the reasons that we were able to come forward so quickly is because the work that we are doing, the organizing that we're doing in finance, is directly coming from on the ground movements. We partner with the Movement for Black Lives, the Poor People's Campaign, these types of organizations that are directly working on these intersectional issues to tell us, oh, it's actually these companies that are part of the system of mass incarceration, for example, and these companies that are part of surveillance. We'll provide a link to that racial justice exclusion list and the New York Times article that explains further in the chat. But I believe that we were able to respond in that particular way so quickly and thoughtfully because of that deep connection. And that's really what's wrong with our current financial system. Kind of the higher up you go, the more you go where the power's concentrated inside of these publicly traded companies, the less connected they are to those that they most impact. And we know that those who are closest to the problems are always the ones with the best solutions. And so it became very obvious to us, for example, when COVID came around and it was really obvious that suddenly everyone cared about this class of workers, essential workers, we were like, absolutely, it's time to come forward. And you'll be seeing this coming forward. It's time to come forward with our livable wage campaign, which specifically focuses on ensuring that no one is paid the sub-minimum wage. Did you know that it's possible to pay the sub-minimum wage? The federally allowed sub-minimum wage is $2.13 per hour. And these are the people who are primarily tipped workers, but there are other ways that companies and publicly traded companies in particular exploit this loophole. Yes, those workers may get tips, for example, but in the end, can you imagine what happens if your unemployment or sick leave benefits are based on $2.13 an hour? That's not something that you can actually live off of. And interestingly enough, those who are most impacted by that are women and people of color. As I said before, these issues kind of are always intersectional. So for us, our economic system is like any other system. When you put pressure on it, it shows the cracks. And so it becomes very obvious, and it's actually been a very important moment of raising awareness where people are actually ready to listen to the fact that, like, no, we actually have to go to the places of power in order to address these systemic issues like those of economic injustice, racial injustice, right? Dealing with gender and also with climate justice. And I'll let it come back to you just in the interest of time. Yeah.
Thank you, Rachel. Yeah, thanks for taking us both kind of broad and deep as we look at kind of broad capital markets and the depth within some of these large companies and where there are those levers for change. As we open it up to all three of our panelists, I think, appreciate the poll in the beginning. Folks seemed really interested in opportunities and solutions. And so given where you sit in the investment landscape, and as you look ahead and think about what it means to overcome some of these challenges, really kind of rebuild systems better than they have been, would love to hear any specific examples of investments, investment characteristics, investment vehicles that our audience should be looking for and thinking about as those tools. Anyone? Oh, perfect.
I'll go ahead and jump in. Yeah, I think some of the characteristics I would list up is, I would start off by saying, I don't think that we can continue to expect the same level of financial returns to the investors and expect a different outcome, right? We need to start questioning the assumptions within how we structure our investment deals, how we move capital. And so for me, when I'm working with projects, and investors, I always encourage people to sit with three central questions. I invite them to really think about who are they investing in. So being really intentional about the communities, the entrepreneurs, the businesses that are receiving the capital, really starting to look closely about how we're investing in them. Are we moving integrated capital? Are we trying to really lean into providing subordinated debt, which we know provides them a platform to actually access traditional capital markets under more favorable terms? And then what are we investing in? Really starting to look at supporting those efforts, those vehicles that are committed to providing community wealth, that have deep relationship and connection to social movements that are community owned and community governed. And so I have found it helpful to kind of use a theory of change for my work, where we look at those projects that are community owned. So bringing together initiatives where groups of organizations, groups of people are coming together to collectively own and manage an asset. So as opposed to where we have the financial returns going back to just the investor or just the entrepreneur, really starting to think about how we're sharing the wealth and the returns. And then also looking at how are we sharing power? How are we actually democratizing the decisions around how that investment is used, about what's happening within that business, within that community. And so also ensuring that we're providing those that are most directly impacted an opportunity and a pathway to be a part of making the decisions for that particular investment strategy, and understanding that at the end of the day, while a lot of our central work as those committed to impact investing is about providing and supporting economic stability and hopefully engaging in the redistribution of wealth, that the work is also about looking at how we are supporting communities and being able to leverage these specific assets to be able to then exercise their political, economic, and cultural power, right? This is actually ensuring that people have the platforms, the vehicles to assert their right to have decision-making authority over their livelihoods and their communities. And so for me, there's a number of projects that I think that are super exciting that have been taking off across the country. And I saw somewhere in the chat box, someone lifted up Lucas Turner Owen's work. Lucas, prior to kind of launching his latest consulting group, has been a part of an effort, Boston Ujima. And so this is a community governed fund where community members have come together in deep solidarity with social movements to figure out how to structure and make investments that are non-extractive to support those entrepreneurs and businesses that share the values of their local social movements and also actively participating in building power. We also have initiatives like the NDN Fund, launched by the NDN Collective, those indigenous communities from the Lakota tribe that are on the front lines of kind of the fight that we witnessed over in Mount Rushmore earlier this weekend. We also have the Real People's Fund based out of the Bay Area. We have the Runway Project lifted up by Jessica Norwood, which focuses on providing early runway capital to Black entrepreneurs. So there's a number of different place-based, community-owned and governed vehicles where communities are coming together to actually say, we want you to move money into these vehicles because we're rooted in right relationship with our friends, our neighbors, and we want to actively be able to control and make decisions around how money is invested in our communities. And so those are some of the projects that I think are really exciting. I'm really trying to encourage my colleagues in the impact investing field to really kind of lean in to this invitation around sitting with the need for reparations and really committing ourselves to redistributing wealth and understanding the need to kind of prioritize the social returns, the social benefits over the financial returns to the investors. So those are some of the characteristics that I encourage people to look for, and some of the vehicles that I think are super exciting that are taking place right now.
And Alexandra, I'd just like to add, I think one of the other things in addition to what Emeka just laid out, all critically important, right? Right now, where capital sits still matters, right? So as we change the system for the future, we also have to address where we are today. So in addition to those kinds of things, I think equally important, wealth sharing also must include sharing your network, right? And when I say sharing your network, you're not making an email introduction, you're doing a formal, warm, what I call a warm handoff, right? Taking people along, because right now, a lot of our systems are one that are rigged for the incumbent, right? Or the incumbent's family, or their other relational kinds of pieces. So opening, it's kind of cliche, opening that door, not just for people to stick their head in and say hello, but to actually have a seat at the table, because as we incrementally change how capital currently is reaching communities, the real big capital still sits in pockets of money, similar to what Rachel has listed in her list. How are you getting folks at that table who can influence those decisions and that decision making about those larger swaths in real time today? And that's going to take focused effort and intent to be able to do that. And a lot of folks, again, given they aren't there, need to be able to have, as part of all the other activities, some degree of comfort that that network is going to be open to them in a way that allows them to be part of the decision making.
I'm so thrilled to hear from you, Lori, and also just everything that you were saying, Umaka, like so in line with all of the points that you were making. Specifically to Lori's point, less than 2% of all assets that are out there are managed by women and people of color together, combined. That's a Knight Foundation, very well researched understanding. And I think that comes back to really understanding what Namaka was talking about in terms of democratizing power. It's not just about who the investment manager is. However, when the investment manager themselves is someone that's outside of the dominant paradigm, they're going to bring with them an awareness of, an understanding of, and new tools and structures, right, for being more inclusive. So I think it's both a matter of seeing like who's managing the money, and on top of that, are they managing it with a reparations lens, with an eye toward sharing the power? And that's something that has to be baked in from the very beginning, because if you don't, we're just kind of perpetuating the conveyor belt of racism. If we aren't walking in the other direction, right, with as much velocity as it's going, then we're just going to stay entrenched in the systems that we're already in. I also, just further to Lori's point, we're writing an article specifically to help the financial industry understand its deep roots in the systemically racist systems that we have. One of the reasons there are so few managers of color and women is because there are all of these rules that are intended to protect the investor, make sure that the investment manager has 3 or more years of service, make sure that they have at least 100 million under management. And all of those are designed to quote unquote protect the investor by going with someone who's already done it before and already has enough trust from other people. But if you keep doing what you've always done, you'll keep getting what you've already gotten. And if what we want is something different, we actually have to do something different. And that means that extending the people who get passes on those standards, by the way, like when you're going for foundation money and in other places, the folks who get passes on that are the people who have relationships, right, with the folks who are making decisions. And so it actually ends up being extremely important to be intentional about opening up those relationships and creating systems where if you are going to have hard and fast rules, make sure that the people who are going to get exceptions from those rules are the people that you actually want making different decisions with the dollars. And just also further, I just love being on this panel with both of you. Also further to Namaka's point, we really have to rethink returns. Right now, returns are based on an idea that we're dealing with the whole story, that personal financial returns are the whole story. And it is just not true. And I don't even need to do a long paper to convince you of that. Just check in with yourself. Like if you're doing just fine, but your best friend has lost their job, back when we went out to go to dinner more, don't you pay for dinner more? Don't you care more about the collective and how everyone's doing? And I feel like it's the same thing if I'm saving for retirement, in which I'm doing great, but my best friend's eating cat food, or there are people living on the streets, right, outside of my home. Like I'm not actually happy. Social return really actually matters to us, but we've accepted this distorted narrative that the only thing that matters is financial return. Now, I'm not one to say that you should not expect any financial return. I believe that healthy systems tend to have some growth in them. You know, even a natural forest grows at 4% approximately per year. Like healthy systems can have some growth in them, but is it growth that's actually exploiting and extracting, or is it a healthy level of growth that maintains like a well-tended, diversified system? I think we have to start thinking of true return as that combination of personal financial return as well as the social return that we're all seeking.
Great, thanks for that. Lots of good stuff here around power, sharing power, changing systems of power. I'm also starting to see several questions come in on the chat box, and I want to make sure that we have an opportunity to hear from those of you on the line. So if you have a question, please do put that in here. I want to start because we've had a few comments in here using a very recent example about the ability to use our economic system as a lever for advocacy while we work to change it. There's an example in here, the racist naming and branding of Washington's NFL team has been, a point of advocacy, an issue around advocacy for a long time, but it's been some recent pressure from institutional fund managers onto large companies that are the keynote sponsors for that team that then transferred into the NFL to finally get to a point of potential reconsideration of that naming and branding. And I think there is a question in the comment box here about whether or not the time is ripe for for our financial system to be a better advocate and to really accelerate some change there. And, Rachel, perhaps this is a question for you. Would love to get your take on this particular instance, and in particular, how do we use the financial tools we have now as leverage?
Great. This is it's a really wonderful moment. Our social justice strategists actually work directly on this inside of the Racial Justice Investing Coalition, which our firm primarily staffs within the industry. It's a multi-billion-dollar coalition of investors who are mostly in public markets and have come together to work on issues of racial justice. And we had actually tried this before, but couldn't get any of the major shareholders of the folks that did advertising with the Redskins, right, to kind of move to do anything on our behalf. But because of the recent uprising, a method that we had tried in the past, which is something called shareholder activism, where you say, hey, we own shares and we're interested in this large company behaving in a particular way. Like the FedEx, for example, which I would not necessarily call a socially responsible company, just so y'all know. But FedEx was more receptive to shareholder activism and the request, and they saw something that they could do. I think right now companies and individuals are hungry for something that they can do. And so when a major advertiser goes to the Redskins and says, like, actually, there's a problem here with your name, it has a really big impact because we're messing with the potential advertising revenue, right? Then it's suddenly under consideration. Shareholder activism is so important, and I just want to be super clear that while it's important that that type of activism is engaged with, that's only one lever within our system of interacting with publicly traded companies. And it's a system that changes companies and issues generally once at a time. And what we feel is extremely important is actually changing the standards by which publicly traded companies are measured, because that creates systemic change. So when you are actually able to go the route of divestment, for example, and I find it so, and saying like, these companies engage in these behaviors, don't invest in them. I find it so interesting that our industry is frequently saying like, divestment doesn't work. And I have to tell you all, it is not true that divestment doesn't work. Divestment worked so well on apartheid, actually, that there's been a big push against it. And we haven't had racial solidarity within the investment world since then. So divestment requires participation and solidarity. If that's something that we're willing to do together while listening to impacted communities about where we should be divesting and then also investing our money, we have the ability to make a huge impact.
Great, thank you.
Can I just underscore something, because I think this is really important in what Rachel was lifting up. What we saw happen with the NFL team is that their response was, we will evaluate it. They have not actually committed to changing their name. And this is where we need to be very intentional about looking at the political action that people are calling for. What Rachel's really lifted up is that we are trying to move people to actively divesting. And so this piece where the response that we get from major corporations is that we will research it, we will study it, is that we need to have more data. Well, the data is actually already there. And we don't actually require that same level of rigor around data when we're trying to see impact in our own portfolios. And so I want to encourage people to not kind of settle for the stalling tactic of evaluations and studies and reports, that now is actually the time to move towards action.
I agree. And if they don't move toward action, take the capital away. Mm-hmm. And there's an argument also that divestment doesn't work. I want to be super clear. I'm not just going to say divestment works. I'll give you a very real world example. The people who are making decisions about the direction of publicly traded companies are people in the C-suite, CEO, CFO, COO, those types of people. They are primarily paid, as well as the board members, in shares of the company stock. If there is divestment and fewer people are buying the shares, the value of those shares goes down and their compensation goes down. And so those individuals are being directly impacted. And we know that that's kind of like the key to change. That's one of the reasons. The other reason is that when that company goes out to the market to try to buy, to try to sell more shares or to issue a bond and borrow money from the market, if people aren't buying their shares, they have to offer a higher interest rate. They have to offer a lower stock price when they're out there offering more stock. And so divestment kind of, like, if they aren't actually taking action beyond studying, beyond considering it, then we need to really take away the capital, increase the cost of capital, reduce the pay of these folks. And we have the ability to do that if we work in concert.
Hear, hear, hear. I recognize that we've only got a few minutes left, so want to request that you put any of your final questions into the chat box and kind of take us back up to one of the earlier ones that came in for you, Lori, around around capital flowing to CDFIs, and as we kind of are in the lead up to November's election, if you see that being kind of a question that's asked of our presidential candidates and part of the election process.
So interestingly, you know, I think that that's one of the this is really a point in time for CDFIs, when you literally can have, you know, the head of Goldman Sachs and other folks, Robert Smith, lots of, you know, Pete Buttigieg, even candidates themselves actually saying CDFI and actually knowing what it is critically important. So I am very excited about the fact that CDFIs have now become a recognized critical component to the financial services ecosystem. They know the value of us as an industry and of these entities in communities, particularly when crisis hits, because we can respond so quickly. Our size, our flexibility, our connectedness to community is very, very, very important. And so if you're following at all a number of the proposals that are before Congress now, the HEROES Act and, you know, CARES Act, whatever number we're on, for so forth, there are lots of proposals in there to increase funding for CDFIs. And there is generally universal bipartisan support for the work of CDFIs. So I think that the fact that we haven't gotten there is a reflection of the dysfunction of our legislative branch at this point versus there being lack of support. And again, you name those kind of blue chip players and knowing who we are, well, it's relevant because they are the people who have the voice of those political candidates. But yes, we are known. I think that that opportunity is there. I think it's a question that should be raised now that we're down to Vice President Biden as being our candidate. I have not heard him speak of it specifically, but certainly during the campaign, Pete Buttigieg talked about it. He's the one I remember very specifically speaking about CDFIs. So yes, I think that to the extent that we can get them to commit to prioritizing the work of these community development organizations and institutions, it would be critically important, because we will go where what I always say, you know, the commercial money won't go. We know the communities, we are a part of those communities, and that allows us to go in and take what some see as outsized risk, and we know not to be that. And again, it goes back to culturally competent capital.
Thank you for that. I know we are running close here and we won't be able to get to every question. There have been a couple in here about enthusiasm for wanting to join this work, to join these efforts and to really get started, and recognizing the purpose of this group is to build connections and help women in the community think about growing their careers. Perhaps the right way to wrap us up here, and would love to start with you, Amaka, your advice for women, women younger or women who are emerging in their careers in around finance, around racial and social equity. How can we think about getting started from a professional perspective?
Yeah, this is a great question, Alexandra, and I would offer kind of a non-traditional way of approaching the work. I think this is really an opportunity to get engaged with those social movements, those efforts in our local communities where people are starting to experiment with alternative forms of supporting their local economy. For example, in response to COVID-19, I think we've seen the rise of mutual aid networks across many local communities in the country. I would offer that these mutual aid networks are not just something to do in a moment of rapid response, but they start to actually lift up or visibilize the ways that people are already sharing capital, goods, and services within their community. And so what does it look like to have people that have financial management expertise to support communities and starting to formalize those existing networks, those vehicles as potential community networks and vehicles that can start to kind of move capital in a more intentional, non-extractive and formal way. And I think those are some of the things that I'm really excited to see in this moment, how because people have been called to really be deeply engaged with their neighbors, how do we start to think about these kind of being long-term efforts to start to transform financial systems. And then I would also offer the opportunity to really challenge a lot of the local community banks, community foundations, and figuring out how can they partner together to start moving their capital across the spectrum to be able to support a lot of community efforts. I get to partner with our local CDFIs, like Lori was just speaking to, as well as other values-aligned impact investors in moving capital across the spectrum to specific projects together. And this really helps to kind of build up the financial resilience of these projects and also helps to manage kind of what we typically see in extractive loans and investments. And so those are some of the opportunities that I would invite people to kind of look to within their own communities to get started in this work. And thank you for having me.
Great. Rachel and Lori, would love to have you chime in on this one as well, based on your experience.
I would echo what Mecca just said. Sorry, Mecca, just in terms of how you connect to organizations in your community. I think that there is lots of room and need for talent to go in and, quite frankly, bring new perspective. If I'm being really honest about the CDFI sector, quite frankly, in community development writ large, we are graying, right? There is a true graying of this sector. And so having younger talent come in and want to be a part and bring, quite frankly, a new energy and way of looking at things and challenging us in a way to be really thoughtful about how we've been doing business, I think would move us ahead very much so, and quite frankly, have benefits for communities in a way that we may not be thinking about. So I don't necessarily know that I have anything new to add, but just to say that it's very much needed and that there's lots of room for folks to come in and have an immediate impact.
I would say I would definitely echo what both of our other panelists have said, and also seize this moment. Don't assume that because you don't already have experience in the industry that the skills that you have aren't transferable. We're at a unique moment in time when everyone's paying attention to how few women and people of color are in the industry. And so if it's something that you want to do, become a part of these networks like the Racial Justice Investing Coalition, get involved with local community foundations, offer your time and your talent, if you can, in order to become part of those networks, and assume that you have transferable skills. The fact that you don't come from the dominant paradigm in finance means that you're already starting out with a leg up in seeing systems differently and actually just seeing power systems that other folks don't see. And that is incredibly useful. And I believe that our institutions are starting to take a closer look at their own racial makeup. And there's more of an opportunity now than ever before. So the thing that I would give you is confidence. Like, go out there and start kind of building those bridges and moving yourself into the industry. It's time.
Great, thanks. Well, I think that those are some pretty inspiring words to wrap us up on. It's been so wonderful such a rich discussion for you all to share both your perspectives and your experiences. I think we've got a better understanding of some of those cracks in our system that are maybe being exposed to some of us in different ways, and perhaps for the first time, but certainly that have been put in place over a really, really long history. And perhaps we're at this pivotal moment where we can both kind of use the systems in new ways while we kind of dismantle and rebuild them. Want to thank each of our panelists for joining us. I've been so happy to see so many resources in the chat box here, and some calls for continuing the conversation. I think the WIIN team has some ideas about how to do that through LinkedIn. I'm going to ask each of our panelists if you're comfortable to put your contact information in the chat box now so that folks can get in touch with you. And I think we have just one moment left, so I'm going to pass it back to the WIIN team and to Bava to wrap us up.
Thanks very much, Alexandra. I'm just going to take less than a minute to say thank you very much to our panelists. We were so fortunate to have gathered such an amazing group of women who provided perspective both from the investor lens as well as the activist lens. We're very sorry that we couldn't get to all your questions, but we do encourage you to reach out to the speakers through their contact information, and they will also have a chance to review the chat, and hopefully you guys can connect individually for things that remain addressed. So thank you very much, Rachel. Thank you, Amaka. Thank you, Lori. And of course, thank you to Alexandra. Your on-the-ground perspective was great. Your facilitation of the discussion was amazing. And then finally, we are so thankful to all of you, the WIIN Network, for helping make our vision into a reality. You know, when we first got together in the fall to brainstorm for the year topics, the idea of resilient resilient communities came up, but more from a climate change lens. But with the events of 2020 unfolding, it became very clear that this was important to discuss from a lens of equity and inclusiveness. So we'd like to always get your feedback so that we may continue to improve our events. So we'd be very grateful as we end off if you could please take the brief survey on SurveyMonkey. And we hope that you will join our LinkedIn group. We've shared the link on the chat function. For the summer, we're going to take a short break from panel events, but we'll be coming back to you soon with some details for a social event in August. We're not sure exactly what that will look like, but we'll be in touch, and then back in the early fall with a panel event. So with that, have a great summer. Please do stay safe and healthy, and thank you to everybody. Goodbye.